When do you default on your federal student loans, and what does that even mean? When you fall behind on your federal student loan payments, that's called being delinquent. You're past due, but you can catch up on the payments and get back on track. There are going to be late fees, and that delinquency is going to be reported to the credit bureaus, but that's it, and it's a fairly short-term hit. Now compare that to default. Going into default means that the full balance of the loan is due immediately, and you can't just catch up by paying the past due amount. For federal student loans, you go into default once you're 270 days past due. Up until then, you're just delinquent. So what happens when your federal student loan defaults? The student loan servicer, your Nelnet, Advantage, Mohila, Ed Financial, etc., sends the account back to the U.S. Department of Education, which then sends it out to a debt collector. The government doesn't sell the loan to the debt collector. The debt collector just is collecting on behalf of the government. To get back into good standing on a defaulted federal student loan, you've got two choices: rehabilitation and consolidation. And if you don't take either option, the loan is going to stay in default. Collection fees of up to 25% of the balance are going to get added to your loan immediately, and interest is going to continue to accrue. Now, the government can file a lawsuit, but they don't have to, because they also can employ a variety of administrative actions to collect from you without going to court. And there's no statute of limitations, so they can collect against you as long as you're alive. Look, don't go into default, and if you do take steps to get back into good standing, it's just not worth the long-term financial damage. If you've got questions about your federal student loans, your private student loans, or any other debt, as always, you know where to find me.